Welcome to The Real Money Show, the number 18778 Silver, and the website guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia, and this is the show that discusses physical wealth, physical money, the real money. It's been around for thousands of years, never dropped to zero, and it's a great way to store wealth. It has been a currency before, gold and silver. They're currently not currencies, but they are absolutely a store of wealth. And this week, Jerry, we saw great moves in the silver market, and I wanted to start there because anyone who's been watching the gold and silver market has been watching the price of gold move higher. And those who study the markets know that in bull markets, gold usually gets out of the gates first. And this week we saw, especially today as we're recording the show Thursday, that the price of silver broke $35 an ounce, which I think is not an all-time high, but certainly a high over the last 10 years. And I just found it interesting. I want to share some anecdotes because I had a few clients contact me over the last couple weeks.
All right. Clearly
frustrated that silver hadn't been moving, and they were looking to sell their silver to buy gold, which is understandable if you're seeing big moves in gold. And while silver's also moved up quite well over the last couple of years, it depends on when you originally bought it, right? If you bought silver, 3-4 years ago in the mid-20s, you paid probably close to $30 an ounce, and it's trading at 32. It doesn't feel like it's done a whole lot. Now, personally, I felt that was sort of a market sign that, this market's about to break. And as I spoke to some clients and showed them the charts, I noticed for myself something interesting, which is last year, $34 an ounce was a peak, but there was no support. The support was in the $27, $28 range. And when you looked at the charts this year, you could see that there was support now in the $32 range, that at $32, $33, this was no longer a peak. It was just sort of natural ranges.
Right.
On the high end of the range, yes, but the bottom there was filled in, right? There was that backfilling and the back testing, etc. So I am not surprised to see silver breaking 35. And when we think about Michael Oliver's suggestion that when we break 35, we're going to see momentum to the upside, we've heard people like, I think, Vince Lancy talking about that we could see $40 by the end of the summer. Where are you right now as we excitedly watch the silver market making its bold moves?
I'm tremendously bullish now on silver. I've always been a silver bull. Obviously, you want it now. We want our gains right now. This is the mentality that we've been given when we trade. When we trade and we trade our ETFs or stocks or cryptos. You're doing some quick flips, but we're talking about wealth insurance. These are assets, and this is something to hold and to understand why you're holding it is of paramount importance. But when you have silver hitting its 12-year high, there was some weak U.S. data that came out. Now there's a push for rate cuts, and a lot of rate cut bets are coming in, typically on the back of the poor jobs data that came out on Tuesday out of the States. And because of that, that was when President Trump tweeted and called out Powell and said, "You're too late. We should have been cutting rates." Well, obviously, they need to see the interest rate cuts, which is very bullish for precious metals. Over the last 3 rate cut cycles, and this is why we're seeing the fuel under silver right now, over the last 3 Fed rate cut cycles over the past few decades, silver explodes on the top side, 400 average %. And if you're looking for those gains, and that actually trumps, pun intended, trumps gold's moves on the top side. This was what we talked about. This would be a very poor move to sell silver for gold right now, especially when you have the silver to gold ratio last week around 99 to 1. Now we just touched 95, so we just broke through down below the 100-day exponential moving average, which we haven't seen in a very long time. So we haven't seen silver hit this high in over 12 years. Silver to gold averages moving down. This is it. I mean, we have interest rate cuts coming up. So this is where you want to back up the truck, get that silver bullion in there and position yourself for what's coming.
The number 18778 silver, the website guildhallwealth.com. Now, the Bank of Canada did not lower interest rates. Although it is a time of much uncertainty. Some were saying, I think Vince Lancy was mentioning on his daily podcast that, or update on the market, that it was the tariffs on steel that created the uncertainty that pushed silver higher.
Yes.
At the same time, we follow Eric Jung on X, and he was interviewed yesterday, the day before, and he was commenting that it's very interesting that right now silver's rising and gold are rising with very limited open interest in the futures exchanges, which normally you would see a lot of activity if the markets were rising. I have two questions for you. One, what happened to sell in May and go away? Because we're clearly seeing moves up in the market. And two, how does this play in with this idea? I have a lot of people mentioning this, the idea that, and we've talked about it on the show, that the government is secretly manipulating because they need silver for military. Mm-hmm. What are your thoughts when you put all of this together?
Well, we have demand, and we have demand for assets, and especially assets like critical minerals, critical assets, and silver being the most critical of them all, being in the new AI, the AI trends, the batteries that are coming out, phenomenal technology as we advance. You're going to need more and more silver. That is the case. But the Canadian government will not allow that silver to be deemed a critical mineral along with things like tungsten. Tungsten apparently is more critical to Bank of Canada to Canada than gold and silver. Right. So as the world's acquiring silver, India has imported records amount of silver, and this is bullion we're talking about. We're not talking about dust or doré. We're talking about refined 999 silver bullion stacking up, building reserves, building collateral for what's to come. Because liquidity right now, yes, sell in May and go away. I know what's being sold, and we can follow the trends. It's treasuries. The U.S. treasuries are being dumped. This stuff is junk. The U.S. is scrambling to figure out how they can back up their treasuries. We'll probably talk about that hopefully later on in the show. But these are the trends that we're seeing, and Bank of Canada just losing it this week. With the GDP figure that came out, it gave them the fuel that they needed to, for some reason, kept interest rates still. So the Bank of Canada did not cut interest rates.
They also said it was because there was uncertainty.
Very much.
In a time where the government doesn't want to give a budget, which might provide some certainty.
Yeah, that definitely would. But what we are seeing, what is certain, what Canadian families are being squeezed. More and more families are being struggling with record high mortgage renewals. We're seeing the real estate market buckle now, sky high rents, consumer debt, credit card debt. This is economic mismanagement on the behest of the Bank of Canada. They just held rates steady again this Wednesday, just because of the GDP that grew at an annualized rate of 2.2% that surpassed their estimates. It's 1 quarter. And just because of 1 quarter of a GDP figure gave them the fuel to hold rates. But
how did they get those figures?
Exactly.
Bunch of government employees?
Even though the headline GDP is rising, the GDP per person per capita is declining, marking a stealth recession here in Canada that most Canadians already feel. It doesn't show up in our traditional recession metrics like our inflation numbers, which are hacked as well.
Sure.
Even if the inflation GDP looks stable, the cost of living plus high immigration rates are contributing to this GDP per capita recession. You're showing us higher recession. You're patting yourself on the back, but meanwhile, we are in a recession.
Well, look, if the majority of the people that you are bringing in are students and quote-unquote temporary workers, you're not bringing in necessarily immigrants that are adding to the GDP on a per capita basis. If you look back in 1971, Canada had was the richest country in the world per
Yes,
capita,
sadly.
based on population combined with our ability to get out the resources, and we had manufacturing, etc. And if you bring in, low wage workers, that's not adding to your GDP.
Right.
So there's no doubt that the numbers that the Bank of Canada are using are probably, let's say, not accurately representing what's really happening in the world.
Yeah, and the average Canadian is seeing it and doing something about it and rolling out of this type of system, because what we are seeing here is the Bank of Canada operating the Cloward pivot strategy to a T. They're holding the rates, keeping borrowing costs high while inflation eats away at your paychecks. How is this happening? We're seeing the mass immigration. It's inflating this headline economic figure while we get poorer. Housing, healthcare, all these systems right now are overwhelmed, overburnt. And that's why their solutions, the handouts are coming. They're being touted. The universal basic income. They want to give you free money, folks. They don't want you working. That
all
you.
Costs money.
It all costs on the back of us.
Inflation, and you need something to protect against that. And that's where gold and silver come in. You need actual physical gold and silver that has no counterparty risk. In the next segment, we're going to talk about the Canadian banking system. And you really have to question whether or not the banking system is truly as safe as you might think it is. You might be going on vapors from yesteryear that the system is safe, that the stock market is safe. Are you sure it's as safe as you think it is? We're going to talk about it in the next segment. And if it's not anywhere near what you think it is, you need protection against that. And that's where gold and silver come in, because there's no counterparty when it comes to physical gold and silver. They are at 10-year highs. Gold is at all-time highs. The reset is a process. It's not an event. And things are happening in a very rapid pace. We're going to talk a little bit about uncertainty and the Canadian banking system and the markets at large and just how safe they are, Jerry. But first, we were going through the book, the RSP book, over the past week, and I was really pleasantly surprised at how well people have been doing. It's happened. There's been just so much movement in the last couple years, and then silver in the last week specifically, that it's really great to see how well people have been doing. It's looking at accounts that are up 100%, 70%, 150%. What a nice thing to see in your registered account portfolio, right? That's got to take a lot of weight off your mind when you see gains like that. Is that set to continue? Before we get into the banking system, I want you to answer the question. Okay, great. Gold's at all-time highs. Silver's broken 35. Is that it? Have I missed the market? Are we in bubble territory? Is it overbought? Am I waiting for the crash? Am I going to wait to buy this thing on the dip? Where are we at?
Nope, there is a massive momentum shift. As I mentioned in the previous segment, the silver to gold ratio. It sliced right through the 100-day moving exponential moving average. It's a momentum shift. The silver to gold ratio, it just broke below that. It's a huge bullish signal for silver and even for gold. So if you're a silver stacker, continue to accumulate. Historically, this move precedes strong silver outperformance. You got to keep an eye on that ratio. It's now waking up, and you haven't missed the boat, thankfully. So you want to give us a call and get into the market right away.
The number 18778-SILVER, the website guildhallwealth.com. And what's the best way to do it, Jerry? Do I just log into my electronic trading account and just pick up a mining share? Do I just, pick up any pool account fund that I can find? What's the best way it's going to happen?
Well, if you're looking to eliminate counterparty risk and really putting your money towards something that has no influence or is not going to be influenced negatively by the lack of performance somewhere else. That's what gold and silver provide. It provides you with a decoupling of your wealth from various risks in the banking industry globally, you name it, and plus it is liquid for you.
But how am I going to be guaranteed to know that it's secure, that I can trust that what I'm acquiring is actually the real thing?
Well, first, you're getting in touch with Guildhall. We are the pioneers. We have put together the gold and silver, the physical gold and silver RSPs. We did this back in 2015. This is over 20 years. We've been doing gold and silver since 2002. We understand your reasons, and we understood your reasons for utilizing your RSPs. You want to protect your RSPs when you're not hearing about them, about gold and silver's benefits, what they can do. When you know what the currency's purchasing power, which has lost over 97% of its value since 1916, Canada's currency is in trouble. The Bank of Canada has lost all control. And this is the safest way to do it, because when you have allocated gold, you have allocated silver and gold bars that are titled to your name. You can either come into the office, take it home. Bob's your uncle. You've taken it away. Or if you have a registered account somewhere else, we help you move over to us, where we allocate physical precious metals into your name and your sub-account outside of a digital banking system, and you're now converted outside of these fiat currencies that are dwindling away, and you're now valuing your RSPs, your TFSAs, your liras in ounces that the world is looking for, that the world is demanding, and you should demand that excellence as well.
And the products are stored physically at Brinks, and clients have access to go and personally audit their holdings. Quickly, before we jump into the uncertainty of the banking system, and we're also going to get into the issues currently with stablecoins, short-term, long-term, what are some of the reasons that people are coming to you right now for precious metals, and what amount are they putting in? Are they sticking with the 10-15% as analysts talk about on a lot of YouTube shows? What are you hearing from your own clients?
Yeah, well, thankfully, because of media like X and Vince Lancy, people are getting the information. But on the contrast, the legacy brokers that they have had for the last 10, 20 years that have done really well for them, they're not hearing what they want to hear. They're not hearing the new trends, BRICS, and gold standard talk and revaluation and collateral. We have Goldman Sachs coming out talking about silver and how they benefit during times of tariff uncertainty, and even stating last week that the legacy 60-40 is dead. If you're still splitting your portfolio with a 60-40 paper-to-paper split 60-40, that's dead, is what Goldman Sachs is saying. Gold now plays the role of neutral collateral, is what they said. Trusted when institutions are not. I think trust has just been dwindled over especially in the last 5 years, with lockdowns, with uncertainty, with digital banking freezes, all of that jazz. People are looking for safety. They want peace of mind.
If someone wanted to do their own research, who are you listening to? Who would you recommend that, if we were to do the reading rainbow, don't take my word for it, who would you recommend that people check out?
It's constantly evolving. You start with the X22s every now and again, right? The X22
Okay.
report. I'm listening currently to Vince Lancy, VBL, Fix, obviously Arcadia Economics, Chris Marcus, great job. You want to keep in touch with these guys. They have their finger on the pulse. Obviously, legacy guys in the gold market. I call it online mentors. Egon von Greyers out of Switzerland. You have Mike Maloney. History of money. If you're looking at what is in your wallet, what's in the bank, how is the banking system still solvent today? What's keeping it solvent? And are we really protected? And you got Rick Rule as well. So you have a plethora of people that are moving in the right direction. Kiyosaki, obviously. Whether you want to, if you're interested in even digital assets.
That guy's gone off the rails, though, man.
Yeah, you're going to have to, it's relatively new. Digital assets, we're still kind of coming around to understand where we're evolving, and I think it's evolving in the right direction.
Well, we'll get into the digital assets in the next segment, but first, let's talk about the current state of the banking system in Canada. Before we got on air, you were bringing some data forward that was blowing my mind. So how safe is it? Let's start with insurance. Like, if something were to happen in the market that was similar to like a 2008 financial crisis, how stable are these banks, and what kind of insurance could we be looking at if there was a major disruption in the financial markets?
It's a very common thing. I mean, a lot of people brought up since 2013, when the bail-in clause was put in by the Canadian budget, we have that.
Who was the architect for that?
Mr. Mark Carney, obviously, and et al. So we have central bankers.
So you've got
planning
the
our
guy.
future.
You've got the guy leading Canada who was the architect of the bail-in clause. Don't be surprised if he doesn't use it.
Yeah, that's what he says. He says that the government proposes to implement a bail-in regime for systemically important banks. So this is what they've written and they've drafted, and obviously there are proponents that on the other side saying, well, there's no specific account that they're going to take from. Obviously, if they tell you they're going to take it from, for example, the RSPs, no one's going to put their money into the RSP. So that has to be very vague and gray areas everywhere.
I mean, it seems like if you followed the last bail-in, where was it? In Cyprus. It was checking accounts. It was savings accounts, checkings accounts.
Italy.
There's no way they'd go
Venezuela.
after retirement accounts. It's you have over $100,000 in the bank. You already know you're not insured, right? Best of luck to you.
That's right.
And then there would be capital controls, right? But what's the event that would occur under? Talk to us about what's the stability factor right now that could cause that to happen.
Well, how do we get here? The fractional reserve banking system is the culprit. And I didn't know this, but there was a paper that was written a while ago that actually uncovered that back in 1994 in Canada. This is written by Guillermo Matamoros, University of Massachusetts. He was doing some work with his Monetary Policy Institute blog. He wrote, in Canada, there are no reserve requirements since 1994 in Canada. So it's basically a legalized Ponzi scheme that allows banks to lend out your own deposits many times over, keeping nothing in reserve. And how this gets bad, we saw in 2021, Chrystia Freeland decides with decree to lock bank accounts down. And we were very close to seeing a huge bank run. When people lose trust in that system, they want to take their money out. And they really showed. A few days later, they had to relent and recant, and they flipped. I believe they got some phone calls from the upper
I guarantee
echelons.
They got some phone calls, because when that was happening, the amount of money flooding out of the banks was ridiculous. We were crazy busy. Hey, at the end of the day, people saw what was going on and they said, I need physical gold, I need silver, I need out of the banking system. So we've had a glimpse of this. We know that the options get very limited. You think about, for example, it's great that the crypto network has grown, but there's no off-ramp, right? They block your accounts. There's no off-ramp.
Correct.
Right? So you're locked into what can you buy with crypto, because you can't go to the supermarket for that yet. Mm-hmm. Maybe in the future.
Yeah, and the average folk that we help, they're really not too comfortable with digital. I mean, we're so overwhelmed with how many passwords that we have to remember, PIN numbers, resets, you name it. We go through this all the time. And this is just probably the key way of undigitizing your wealth and making sure your money cannot be frozen like Russian assets were frozen geopolitically.
The number 18778-SILVER, the website guildhallwealth.com for physical gold. You can buy it direct. You can hold it for ease of liquidity. We had a client this week, Jerry. He's been, listen to this one. This client of ours, he's been buying 10-ounce bars on a regular basis. Stopped buying a couple years ago, and he just said, hey, listen, I got to bring this to you guys, because I didn't realize how much I had.
I saw him here.
Yeah. he had over $80,000 worth of silver. He didn't realize that he'd just been storing that at his apartment and realized, you know what, I need to put this away. But and we were happy to help, get it fully allocated into the vault, and now anytime he needs money, call us up. Sell off a few 10-ounce bars, and we'll e-transfer you the funds right away. But you were mentioning about the banking system. So if there's zero reserves, any sort of financial disruptions could be really, really bad for the banks. And then talk to us about, very quickly, we only got a couple minutes left, a minute left. Talk to us about the insurance side of it.
So yes, this is in a true systemic banking crisis. Obviously, you believe it or not, if you believe in this type of thing or not, if it happens to all accounts. So obviously, in a single bank failure, you are insured. $10,000 is protected. But in
10
a
or
true,
100?
Sorry, if you had $10,000 in the bank, your 10,000 is protected.
Got it.
In a true systemic banking crisis where multiple banks fail at once, the CDIC's fund, which is supposed to cover insurers. Now, in Canada, we have total deposits by our citizenry, $1.2 trillion Canadian. The CDIC fund, as of last in 2023, had $8.6 billion. That coverage ratio is 0.7%, which means if you have $10,000 in a systemic crisis and everyone tried to pull their money at the same time, you end up with $73. That's at that coverage ratio. So in a systemic crisis, there's no guaranteed by the CDIC insurance, despite their commercials that they're showing you on TV, to pay out all claims immediately. So, just less than 1% of your deposits are pre-funded for protection. You are a unprotected, you are unsecured creditor at the bank.
And of course, they could print the money. They could say, okay, fine, we'll print $500 billion to make the depositors whole, or $1 trillion to make the depositors whole. But what does that mean for the value of the currency?
Yes.
Let's revisit CERB. People took CERB. What do you think that did to inflation eventually, right? That money wasn't free. It ended up costing you at the grocery store and the gas station and all parts of your life. It ended up costing, right? And
nothing is free.
And now people are like, oh, I want universal basic income. Like having the government create even more money out of thin air is supposed to help us. So the idea is to stop the madness.
Exactly.
Stop repeating the same thing over and over again and waiting for the government to provide solutions that just end up costing you more money. Break that cycle by owning actual physical gold and silver, which, by the way, both are up. We're up over 37% last year. This year, they're both up, I think, over 20%. They're both doing fantastic. And, look at the fundamentals. We're at the beginning. I liked what Eric Young said in his interview this week. He said, we're at the end of the beginning. The end of just the beginning. Mm-hmm. We're moving into
exciting
the next
times.
phase. Exciting times. If you want to own some physical gold and silver, we're happy to walk you through it. We are very service oriented. We'll show you how to get involved in the market. It is quite easy once you've done it once, you've done it 100 times, but people like to have the walkthrough, and we're happy to show you how to do it. The number 18778 silver. The website guildhallwealth.com. We've seen incredible performance. But at the end of the day, it's really a function of protecting wealth and proper diversification. When you think about diversification, typically you'd say, well, I need some stocks in this sector and stocks in that sector so that, if one sector goes down, I'm doing well in this other sector. But at the end of the day, you're holding stock portfolios and real estate in a currency. And what's protecting you against the currency? And that's where gold and silver come in, because they are negatively correlated to the dollar. And whether or not that there is a direct gold standard to quote, what's his name? Jim Rickards, who's another good follow, by the way. Jim
Please
Rickards
follow.
is great. The fact is that there is a de facto gold standard, and people can hold physical gold and silver. And that's what we're seeing central banks doing en masse, because they're expecting the reset. And again, it's not an event; it's going to be a process, and we're seeing that happen. There's evidence of it all over the place. So before we get into that, the number 18778 silver and the website guildhallwealth.com. Give us a call. We'll show you how to get into the physical gold and silver market. And if you want to hold gold and silver in an RSP or TFSA held outside the banking system, fully secure, fully insured, you own it outright, it's actual physical metal in a registered account, give us a call. We'll show you how to do it. Jerry, let's talk about stablecoins. They've come up in the news recently. The idea is that they're meant to make the system more functional and sort of more liquid in a way, and that brings with it a lot of practicality and could save a lot of money. There's a lot of money, trillions of dollars locked up while you're waiting for transfers to come through, etc. But they have a challenge of credibility talk to us about what stablecoins are doing right now to bring that credibility to the table, and if that is actually a viable way.
Well, yeah, and I think this is tied into the revaluation talk you mentioned. The revaluation and the reset is a process. It's not an event. It's not something that's happening. And this is part of the process. Digital money was the title of just this past week. There was a presentation to the U.S. Treasury Department. So treasuries are in the news. A lot of junk treasuries are being dumped by countries because the things that are backing the treasuries are just junk. You have mortgage-backed securities, credit default swaps, nothing really good in terms of collateral or in the eyes of the banks. They don't really see that as good collateral. We know gold is. But the Treasury Borrowing Advisory Committee started studying this, and they discussed digital money known as stable coins as a new payment mechanism that could benefit the Treasury by generating materially heightened demand for Treasury bills. This is their solution to ensure that treasuries are not dumped and that they are bought. We need to have countries buy the treasuries.
So wait a second, the stable coins go out and buy the treasuries to stimulate demand.
So over 80% of the assets backing Tether, which is one of the major stable coins, is cash equivalents or treasuries. So the stable coins, which are a unique type of cryptocurrency, they're designed to maintain a constant value as opposed to fluctuating up and down like some other cryptos.
Oh, so they're not as speculative then?
No, they're not there. The purpose is not to fluctuate wildly or to invest in. Stable coins aim for near zero price fluctuations. Typically, stablecoin values are pegged to currencies such as the dollar, paper, and treasuries. But you have various other stable coins that, back up their coins with other riskier assets. So we go down the line as to, the Extras pyramid. What are you backing this stable coin with? So this is now a study. So stable coins, when it comes to the government, it can benefit because it's going to offer faster and cheaper transactions versus traditional SWIFT banking systems, more access. They will facilitate financial inclusions for individuals without, typical access to conventional banking services.
And this is something that the Treasury in the United States is pro. They like this idea.
Yeah.
Well, I could see that. The idea would be we want less financialization, we want less control and fees being charged by the financial system, by the banks, by the big banks, that they could say, well, this is probably a better benefit to Americans, no?
Mm-hmm.
Well, what's the problem?
Well, the problem at the moment, as we know, and if you are in the know of the crypto space and specifically Tether, it's never been audited. It's supposed to be backed 1-to-1 with dollars. Are they? What's really backing these things? Are there derivatives underlying these treasuries, these stable coins? We don't know. So where I'm leading with this, and this is my speculation, is where we see the report actually shows that the use, especially by the Treasury, they're going to see growth in the stablecoin. Right now, the stablecoins are worth $234 billion, and they believe the number can multiply to $2 trillion in a couple years. They think Treasury bills collateralized by stablecoins are going to grow as well. So this market is moving towards,
So growth as a means of credibility.
Yes.
Let's stay on this topic for the next segment because we're going somewhere with this. And just remember, this is a show about gold. So that's a hint of where this is headed. The number 18778 silver, the website guildhallwealth.com. If you're looking for part of your portfolio to be tough, durable, and dependable during times of insecurity and times where we don't know where things are going to happen and how things are going to unfold. You're not sure if the stock market's supposed to keep rising during a time where it feels like there's a recession. You might want to look at having a safe haven that is negatively correlated to the dollar in your portfolio. Hold it in a registered account like an RSP, TFSA, or a LIRA, a LIF, a RIF, a spousal RIF. The number 18778 silver, the website guildhallwealth.com. We're going to get back into stable coins, find out where this is all headed, Jerry. But first, we had some pretty interesting news in the diamond market this week that I wanted to bring to your attention. The GIA, the Gemological, what is it? The Institute of America. Thank you very much. Have updated how they're going to grade lab-grown diamonds.
Like tier 1 assets.
Yeah, they're no longer going to do 4 Cs for lab-grown. It's going to be 2 options on their reports: premium or standard.
That's it.
That's all you get.
Why is that?
Well, they've
qualified.
as my dad would say, they've done themselves in.
Yes.
They've cannibalized themselves. They were always after the money. They started with, oh, look, it's just carbon, and it's a third less than the real thing. Now it's 1/3 the price of the real thing and probably dropping.
Mm-hmm.
And there's no secondary market for it. It's like buying manufactured pearls, not even cultured pearls, right? It's like you're buying something that ostensibly is fake, and there's no story in fake. I mean, yes, it's economically cheaper, right? But at the end of the day, if you have a Louis Vuitton store and you're selling Louis Vuittons and right next to it you're selling the knockoffs, you're not doing your business any good.
Yeah, you're
and
right.
if you have a Rolex store and you're selling knockoff Rolexes right in that store, you're not doing your store any good. And at a time when the luxury market is really struggling, you got to draw the line. Look, I used to work for this club, and they were very discerning about who they would let into the club. Let's go. You hear that stories in Studio 54 and whatnot.
Right.
But look, at the end of the day, like, it's okay to have standards. Not everything has to be DEI. What did we find out about DEI? People can't they do terrible jobs. They crash helicopters and stuff. It's not good. People die. It's terrible. When you think about it.
Yes.
There's nothing wrong with having discernment. There's nothing wrong with that. And at the end of the day, you want to look for really high quality.
Yeah.
And it was great. Over the weekend, I was showing some natural fancy colored diamonds, and it was just such an experience to show people, and they see the difference in the different cuts and the different faceting, and just how just the color differences. And it was just a really fun experience. But look, I wish anyone the best who has the lab grown. And yes, it is just carbon.
Yes, it is.
Yes, it is.
Well, we saw that. It was a typical, like a crypto pump and dump, where the retailers and the lab growers of these diamonds really just went pedal to the metal. Let's just milk this as quickly as possible to the demise of their own industry, but to the benefit of our industry, because with luxury, natural is real is money, and that will last for a lifetime. And it actually caused people to become a little bit more educated with what they're putting their money into. They're demanding proof that of natural. And when you're dealing with Guildhall, Guildhall natural fancy color diamond, you're getting what you need: the full GIA, the story to back it up, where this diamond came from, and with the 4 Cs. It's not in the premium, it's not in the standard. You're getting the 4 Cs. That's the way you know it's legit.
It's all about value. It's about value. You can't afford to not be buying things of value and not working with people of value and not having relationships of value. If that's not an interest of yours, you're probably going to end up with something that doesn't bring any value down the road.
Dumped.
Speaking of that, let's get back into the value of stablecoins, Jerry.
Yeah, I think this is in light of, what we're seeing globally. It's a move towards collateral. This is the BRICS are talking about the 4 stages with the China strategic BRICS global vault network. We talked about that last week, where the Saudi vault is being built. The Southeast Asia vaults are being built. We're seeing the transition, the move away from the COMEX vaults to the BRICS vaults, and even including Africa vaults. Africa now being enabled to no longer have to take IMF loans, these extortionist loans. Why don't you pledge your collateral, and the BRICS will help you build your infrastructure? What a beautiful thing. And this we talked about last week, and it blends into what we're seeing right now with backing up the system. The treasury system needs to be backed up. Stable coins need to be backed up. And the legislation proved this. Just a few months ago, the Genius Act, which was legislation proposed in February for stablecoins, required stablecoin issuers to maintain reserves on a one-for-one basis with high-quality assets. What are those high-quality assets?
Treasuries?
According to the Bank of International Settlements?
Treasuries.
Tier 1 capital, gold, and treasuries.
Oh, I got it wrong.
Well, just this past few months ago, we had the Bitcoin Act that came out that talked about the introduction of treasuries with stablecoins and gold. I'm going to get into it. The Secretary shall issue new gold certificates to the Federal Reserve banks that reflect the fair market value price of the gold held against such certificates by the Treasury. This is the increase of demand in treasuries, and this is the blending of the three. You have the U.S. treasuries blending with gold and crypto.
So in the Bitcoin bill, it says back your cryptos with gold?
It had nothing to do with Bitcoin. It just was called the Bitcoin
just slipped
Act.
that in there.
They just slipped it in, but it had only to do with the treasury and gold.
So the
And
treasury,
revaluation.
so the treasury is to be backed by gold, but the treasuries are what's going to be backing the
stablecoins.
stable coins. So
On the XRP ledger, by the way.
So you have the short game of stable coins that are backed by, nothing really bringing credibility, but the long game is that they should be backed by a treasury which is backed by gold.
All road leads.
All roads lead.
That's correct. That's the current state of the stablecoin market. It's empty. It needs to be audited. Audits will happen hopefully very soon. But, we have a lot of the U.S. debt, and where people in the media right now, and people are worried about debt ceiling and more debt coming down the pike, even though there was trillions of new deals brought into the United States, Doge cutting costs. People are still fearful in spending, but we're seeing more responsible spending, not towards this and that, DEI, this and that. More responsible spending is what we need to see nationally into the U.S. and hopefully, and I believe it's going to bleed here into Canada.
And I think we're seeing the revaluing of gold and silver, and the central banks were bang on to be holding it because it's revaluing. And I think that the people should be thinking about having a bit of both in their portfolio and taking advantage of that. And now you're looking at it as, oh, well, if I'm a believer in crypto and the Bitcoin Act is looking at having gold-backed treasuries as a result of this, you've got another reason to be holding physical gold, real money that's been around for thousands of years to protect your value and grow your wealth over the long term. The number 18778-SILVER, the website guildhallwealth.com. Give us a call. Go to the website to learn how to hold physical gold and silver as part of your portfolio, and we'll be happy to show you how it's done. If you've missed a show, catch us on YouTube, catch us on Rumble, catch us on Spotify. Jerry, thank you so much for joining us on The Real Money Show, and thanks to all of our listeners for taking time out of your day to listen to The Real Money Show. And we can't wait to speak to you next week here on AM 640.